Jason, thank you for joining us.
Thank you. Happy to be here.
So Jason, I think it'd be helpful if you shared with the students the Sea of Ventures story, the focus of its business in your brief journey from formation in 2019 to mid-2020.
Sure. Well, it has been a journey, that's for sure. So Sea of Ventures, we are, simply put, a venture capital fund looking at early stage healthcare services and technology companies. My partners and I are all former Blue Cross Blue Shield executives with a deep background in health insurance. And that's not terribly unique, but we are also a minority owned and managed venture fund. And perhaps more importantly, we are targeting our investments to women and minority entrepreneurs and management teams. And why is that? Well, it's for a few reasons. One, we see an untapped market. So just to put that in context, 2.2% of all venture dollars go to women entrepreneurs. 0.2% go to women of color. And while those numbers are appalling from a moral perspective, from my perspective, they also represent simply bad business decisions. To summarily dismiss 50% of the population just puts your portfolio at a greater risk level. So we had great success with that population when we were at Zaffer Investments, which was the venture arm of Blue Cross Blue Shield, and we're convinced we'll have strong results with that population going forward.
So again, you began this new venture fund in 2019, and a few short months later, pandemic hit. And so, could you talk a little bit about both the early stages of the startup, what you were doing at that point, and then how the advent of the pandemic, how it affected you?
Sure. So as you mentioned, we started the fund in 2019, and as with any startup, whether it's a financial-based startup, technology-based startup, it took us a little while to hit our stride and to really fine-tune the story. We got to that point toward the end of 2019. We're making great progress. We started our fundraising efforts with health insurance plans, just a space that we knew a lot about and had a lot of contacts. And everything was marching toward a late Q1, early Q2 close, and then COVID hit. And it, effectively put our fundraising efforts on hold for 3 months, which, as an entrepreneur starting a business, you figure out what kind of runway you have, where until you need to actually start earning a paycheck again, and then you have a pandemic that extends that runway. So it was a little bit of an eye opener for us. The good news is, post I'd say May timeframe, we were actually able to re-engage with many of the potential limited partners that we were talking to, and fortunately, I'm pleased to say we're going to have our first close later this month. That the impact of COVID has been manageable from their perspective, and frankly, some of the investment themes that we are looking at have become even more relevant in a COVID era. The second thing I would say is, George Floyd's tragic death and the subsequent heightened awareness of racial and gender inequities across the country certainly raised the profile of our fund, and our focus on women and minority entrepreneurs is something that we are seeing is resonating both with strategic investors as well as institutional investors in the marketplace. So we will be able to close our first round later this month. But again, COVID was it was a bit of an eye opener.